Good morning. This is Horizon's Middle East and Africa, our top stories this morning. In a major blow to Syria's Bashar al-Assad, rebels have now captured the central city of Hama, increasing the threat to the president's hold on power. The crisis continues in South Korea. President Yoon Suk-yeol under pressure from his own party as he remains silent ahead of an impeachment vote likely tomorrow. And traders on the watch for U.S. jobs data that could sway the Fed on a potential rate cut this month. It's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Happy Friday, everybody. We made it to the end of the week. Focus on markets as we head into jobs data in the U.S. later today. The market is anticipating a rebound from that very low headline number that we got last month. Remember, the 12,000 print last month was influenced by hurricane season, by the Boeing worker strike. So we are going to see a normalization of some sorts. The expectations is that we will get a number north of 200,000. What that means for the Fed, again, a question mark for investors at this point. But building on from yesterday's price action, yesterday Wall Street did see a bit of a dip, a marginal dip, pulling back from those all-time record highs for the S&P. NASDAQ as well, seeing another record high for the Magnificent Seven basket. Attention will turn to a ruling on TikTok today. That's going to be potentially impactful for tech stocks from here, because if the U.S. judges rule that the TikTok platform needs to be banned, that it could be a net positive for other social media platforms. So something to watch out for in tech space. Not doing a whole lot today, but leaning towards the red as far as futures are concerned. 10-year yields, again, flattening out around the 4.2% mark. The focus will be on those non-farm payroll print data, but as well as the language that comes through from the Fed as we head into the next meetings. Blackout period now, but of course, going into that meeting, we will be pricing in further what the trajectory of interest rates is going to be doing in 2025, and that's going to influence 10-year yields. So 4.17 is where we are right now. And then Brent, obviously, in focus after that OPEC Plus meeting yesterday, sitting at around $72 this morning. But what we did get was yet another kicking of the can down the road. OPEC Plus have decided to delay once more the putting back of extra barrels to the market. So we're going to talk more about that. Interesting, though, that you're not seeing more of an upward swing in the price of oil this morning on the back of that announcement. Switching over, I also just want to draw your attention to what's been happening in crypto space, namely because, as we spoke about yesterday on the show, Bitcoin briefly broke through $100,000. That was the key psychological level. But in terms of market capitalization, this is interesting because over the course of November, the general market cap for crypto assets gained $500 billion, also gained about $100 billion just in the first couple of days of December. So this tells you that a lot of hype, again, once more, is going into the crypto space. And this morning, we've heard that Trump will be nominating David Sachs to be the crypto and AI czar. So again, giving a lot more love to that part of the market. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio standing by. So much has gone down in Asian markets this week. Avril, just give us a run through of what's happening today.
Yeah, we're seeing a lot of digestion or indigestion in Asia's markets. They are cautious. It's the political turmoil in South Korea. It's also traders bracing for the U.S. jobs data that could influence the path of the Fed when it meets the week after next. So there's caution in Japan, caution in South Korea. But look at China, that jump there. As some point out, there is optimism of stimulus as China's economic work conference gets underway next week. But some of our analysts, like MLive's Mark Cranfield, have already flagged that there's a lot of window dressing behind these gains. You look at the ETFs that the national team tends to favor, they're actually seeing gains as well. So keep that in mind, even as we see these gains potentially going into the weekend on Chinese stocks. I also wanted to highlight what we're seeing in dollar yen, because it's dipping below the 150 level. And this is on the back of jobs data in Japan. And you look at the base wages, they've actually jumped by a record. So feeding to the case for the Bank of Japan to hike rates when it meets later this month. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Now to some Middle East developments. Syria's army says it has ceded control of the city of Hama to advancing rebel forces. The rapid progress made by Syrian insurgents increases the threat to President Bashar al-Assad's hold on power. Bloomberg's Honor Ant has been following developments for us. Honor, good to have you with us. Maybe let's just talk about the significance of Hama falling, not just geographically, of course, because it perhaps opens up the pathway to Homs and later potentially to Damascus, but also because historically the city has immense history when you think about Assad and the uprising that once happened in the 80s there that was crushed essentially by Assad, the father of current Bashar al-Assad. Talk to us now about what could happen and the significance of Hama falling this time around in 2024.
As you said, Jumana, there are three reasons probably why the fall of Hama to rebel forces yesterday was important. One, as you said, obviously lies basically in between, halfway through between Aleppo, where this advance began a couple of days ago, and Damascus, the capital where Syrian President Bashar al-Assad's government is stationed. Secondly, it also raises the question about how much capacity and appetite Russia and Iran may have for provision of further support, military assistance to Assad's government, because the pace at which Syrian defenses crumbled in the face of the rebel advance over the past week, first in and around Aleppo, and later during their advance to Hama, is just beyond any expectation. So if and when there is a change in the Russian-Iranian policy in Syria, whether or not they have the ability to provide assistance to Assad, and whether or not they have the luxury to do so, given the other conflicts that they are involved in, Russia and Ukraine, Iran, with Israel, since the war began in Gaza last year, this carries a lot of weight in terms of what happens to Assad's future and also what happens to the conflict in the Middle East in general over the next few months. But yeah, lastly, obviously Hamas is an important.
Honor, I was going to say this is perhaps the biggest test of Assad's power since 2014. And I just wonder who is going to come to his aid, because Russia is embroiled in a war in Ukraine. Iran obviously has been in the crossfires of a heavy round of exchanges with Israel. So who is going to come to Assad's support here?
As you said, when we look at the period between 2014 and 16, the 2 years that were arguably the height of the Syrian civil war, where Assad really faced great danger to his rule, it was Russia and Iran that came to his help. Right now, obviously, Russia is embroiled in its own war invasion in Ukraine, and there is a possibility that Putin and U.S. President-elect Donald Trump might be involved in some kind of negotiation over Ukraine's future. So that's going to keep Russia busy, as opposed to the case 10 years ago. Whereas on the other hand, Iran is finding it difficult to keep its so-called proxies in the region well supplied. But that's down to many reasons, but primarily the war in Gaza between Israel and Hamas, after which Lebanon, the most powerful Iranian proxy in the region, has been weakened and reduced compared to what was before. And now it looks like Iran is finding it even more difficult to supply or to keep the supply line open between Tehran and basically Syria and Lebanon. So it seems very difficult compared to what was the case a decade ago for either of these two main sponsors of the Syrian government to keep supplying Assad, at least with military assistance, to the extent they were able to do so a decade ago, which was the key element in the turn in the turn of the war in Assad's favor back then.
Yeah, and it obviously raises a lot of questions about what could potentially happen next now that Assad is on the back foot. Bloomberg's Honor Ant in Istanbul, thank you so much. Well, switching over to the energy complex now, OPEC Plus appears to be accepting that its mission to defend oil prices will drag on much longer than expected. That's as IEA data suggests a crude glut is possible throughout next year. Let's bring in VANDA Insights founder Vandana, who's in New Delhi. So we got the announcement from OPEC yesterday, a bit of a delay in terms of putting extra barrels back to the market, a more gradual putback once they do decide to start putting the oil barrels back over the course of 18 months, over 12 months. My question is, why aren't we seeing more of an uptick in the price reaction today in oil?
Good morning, Jumana. So I think what OPEC Plus decided yesterday was what I would call a realistic optimum outcome for that alliance. The market had baked in a 3-month extension of the cuts, and essentially that's what OPEC Plus delivered. A lot of the other details that come out in the announcement yesterday is window dressing. Why is crude not reacting in a more bullish manner to your question, Jumana? Because really what OPEC Plus is doing is perhaps removing a little bit of the expected oversupply in the market. This is from the market perception. Of course, we don't know how much oversupply there is going to be. We see a range of numbers from all the way from about a few 100,000 barrels per day next year, all the way to, as you were just mentioning, World Bank, IEA putting the number at more than 1 million barrels per day. OPEC Plus's maneuvering room, Jumana, is quite low. It really has just the 2.2 million barrels per day to play with now. And essentially, that's what the market is telling OPEC Plus, that overall, whatever OPEC Plus does, there is still an expectation of oversupply in 2025.
And yet there are many OPEC members who would be itching to put more barrels back to the market. UAE already got that carve out back in June. They are slated to start producing more in 2025. And then you've got the likes of Kazakhstan, you've got Iraq, obviously in post-war reconstruction era. How long can these other members and the other key producers in OPEC accept to keep barrels off the market voluntarily?
Indeed, Jumana. So a lot of these sticky points had emerged through media reports in the lead up to yesterday's meeting, because as we know, there were a lot of closed door discussions going on. And one of those reports was that Kazakhstan, which is poised for a major increase in its Tengiz oil field output, especially in the first quarter of next year, might have also been seeking an increase in its baseline. So I think interesting for me from yesterday's decision and agreement was as much as what was agreed was also as what was left off the table. And it looks like this issue of Kazakhstan perhaps getting a higher baseline has been, that can has been kicked down the road, presumably. A lot of observers also pointing out that the UAE is still continuing to get an increase in its baseline, which sort of goes against the overall goal that OPEC Plus is trying to achieve. I would imagine that is to preserve the harmony within the group, Jumana. UAE was promised this increase in baseline, a total of 500,000 barrels per day in sort of 2 tranches, 200,000 phased in through this year and another 300 next year. And maybe putting that off might have created more tensions, especially between Saudi Arabia and UAE. So that's what we're probably seeing. But yes, the question does remain, what about the handful of other members that are also pumping way below their capacity? And could it open a Pandora's box? If Kazakhstan is given an increase in its baseline, Iraq might seek the same. So all in, I think there are a lot of difficult hurdles for OPEC Plus that will need to be overcome at some point, if not 25, then 26.
Let me just ask you where you think the upside surprise then could come from to the oil markets looking ahead. I mean, there are many reasons I could put together to be perhaps bearish or cautious on the outlook. Where could we see an upside surprise?
Yeah, so one, Jumana, I would say is the global economic outlook. So right now, of course, the market tries and assesses what is the expected supply growth in 25, what is the expected demand growth. And to a large extent, we are taking a view on the global economy. So you go with figures like IMF, for instance, which is saying that 2.3% growth this year in global economy, 2.3%, sort of staying flat next year. And the downside risk is gets a lot of attention, of course, that, what if there's tariff wars and so on, and global economy performs much worse than expected. But equally, I think there is an upside possibility as well. If the global economy tariff wars are not as bad, the Fed and other central banks manage to bring down interest rates, inflation comes in control. So if the global economy performs much better than is currently being expected, I would expect an upside to the oil prices. The other element, possibly, Jumana, is also geopolitical risk. So as of now, the market is assuming that Trump will come in and diffuse the Ukraine and Gaza situations. But you never know. There are a lot of geopolitical hotspots. And if there's more supply disruptions, then that's an upside as well.
Yeah, absolutely. So demand, essentially, potentially, we get some green shoots there, and then geopolitics as ever. VANDA Insights founder Vandana, Harry, great to have you with us on the show. Thanks for your thoughts. Well, international mediators have reportedly resumed talks with Hamas and Israel over a ceasefire in Gaza. Last month, Qatar suspended talks with mediators from Egypt and the United States, citing frustration over lack of progress between Israel and Hamas. Now, a Hamas official has told the Associated Press of a reactivation of efforts to end the fighting, release hostages from Gaza, and free Palestinian prisoners in Israel. Coming up, it is Jobs Day in the USA, with economists forecasting a rebound in hiring in the world's biggest economy. We'll get the take of our Markets Live executive editor, Mark Cudmore, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, South Korea's ruling party has been holding an emergency meeting this morning. That's after the party's leader changed his stance on President Yoon, saying he should be suspended quickly from office. And these are live shots of what is taking place there, awaiting some formal recognition of the conversations that are being had. For more, let's bring in Bloomberg's Katya Dmitrieva. Katya, just to run us through exactly what is going on right now, and what the opposition party are calling for.
Yeah, well, we also got a scare just a couple hours ago with rumors that there would be another second martial law declaration. So as you can see, things are happening very quickly. That rumor, of course, was quickly quashed. The military said that if there would be any sort of martial law declaration, they wouldn't actually abide by it. And so that seemed to calm markets a bit, because we had initially seen the won and Kospi swinging around. Now, since then, the question has become, will the opposition party be able to impeach President Yoon? As we know, they need about 8 members of Yoon's party to vote essentially against the party or against Yoon to get him out of office. Yesterday, that was looking like a question mark. It was looking pretty much uncertain. But today, the leader of Yoon's party, and obviously a very close ally of Yoon, said, well, actually, some news has come to light, some information has come to light, and it looks like Yoon, it would be best if he was relieved of his duties. Now, why the change of heart? Well, he said that there was evidence, this is allegedly evidence that he had called, that Yoon had called and sought the arrest of certain opposition lawmakers the night that martial law was declared. And so while we had sort of a whipsaw, and what will continue to be sort of a whipsawing of markets as this news develops.
Yeah. Well, let's actually see what happens in the next couple of hours or so, and whether there was going to be another announcement of martial law. You've got to think that that's going to be a difficult one for the public and the opposition party to digest if it actually does happen. Bloomberg's Katya Dmitrieva, thank you so much. Well, coming up, it is Jobs Day in the USA, with economists forecasting a rebound in hiring in the world's biggest economy. We'll get the take of our Markets Live executive editor, Mark Cudmore, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, it's NFP Day. Economists reckon the world's biggest economy saw a rebound in hiring in November. The estimate is for a gain in non-farm payrolls of 220,000. That is up from a meager 12,000 increase in October. Let's bring in our Markets Live executive editor, Mark Cudmore. Well, last month's number was a bit of an anomaly because of what was going on with Boeing and the hurricane impact. So I guess this month's number will be a better reflection of the underlying strength or weakness of the U.S. economy.
Absolutely, and the economy is strong. I mean, this is going to be a positive number. We're still adding jobs after a long period of adding jobs. The economy is still growing perfectly healthily in the US. That doesn't mean there won't be cracks that come in the new year, but at the moment it's still okay. This is a slightly weird jobs number in terms of all the volatility will be at the front end of the rates curve. This is not a macro number. For much of the last couple of years, we kind of go, this is the most important jobs number ever. That's not the case today. This is not a very important jobs number as it goes. What it will matter, though, it'll really matter at the front end because it'll basically decide, it'll kind of confirm the December Fed cut, which is about 70% priced, or it'll unwind that pricing. So it'll really matter for day traders. It'll matter for that December move. It'll matter for the dollar as a result, and equities will feel the impact of that short-term rates pricing, but it won't make any difference to the longer-term path of the Fed. So it's a short-term day traders jobs number today.
Mark, let me ask you what you think the market is going to place more emphasis on. Is it that headline figure, the 200,000 plus, or is it going to be on the wage growth number, given the now focus on inflation dynamics? And if we see an upside surprise there, then perhaps, arguably, that could make it even more challenging for the Fed, not only to start cutting now, but to continue with the rate cutting cycle in 2025.
Yeah, very much so. I think inflation is coming back onto the radar. I think that, a theme of the last couple of months is that we just had way too many rate cuts priced into the curve. That's been a theme of most of this year, in fact. And we priced out some of those rate cuts. And I think that should continue to be the case. I think there's a lot of uncertainty about what the Fed can do next year, because we have so much uncertainty about what the Trump administration will actually deliver when it comes to policy. Many of the policy suggestions are extremely inflationary and would suggest there could be no Fed cuts next year. But we don't know what actually mix will be delivered. And there's a potential that some of the policy measures are in fact quite growth damaging, which in case the Fed will have to cut more aggressively. So I think that, as I said, the jobs number today will decide what happens in December. But once we get beyond December, it's really so much uncertainty. And if anything, we're still pricing in too many rate cuts, given that we don't know what kind of policy will be delivered. It will probably swing drastically either way, rather than a gentle rate cutting cycle as is priced.
Yeah, and I've got about 45 seconds, Mark. But what do you make of interest rates, 10-year interest rates, sort of hovering around 4.2% here?
I think they stay very stable now into the new year because of the volatilities at the front end. But I think next year the dynamic will be higher back-end yields. That's because we do expect more concern about the debt situation. We expect a fiscal impulse. We expect inflation to come through. We expect the economy will hold up okay. So long-end yields will rise.
Yeah, very clear. Markets Live executive editor Mark Cudmore, and again, making the distinction between what is happening in the front end of the curve, which is a reflection of what the market is pricing in for the interest rate cutting cycle, and then further out, you have to think about deficit debt dynamics as well, some of the more longer term features for the U.S. economy. Well, coming up, we're going to be speaking about France as Marine Le Pen speaks exclusively to Bloomberg. We'll be back. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. In a major blow to Syria's Bashar al-Assad, rebels have now captured the central city of Hama, increasing the threat to the president's hold on power. Citigroup says rich Middle Eastern investors are scouring Africa for deals in agricultural projects, critical minerals, and renewable power. We look into what is attracting them to the continent. And Turkish Airlines becomes the latest carrier to resume flights to Beirut after Lebanon reached a ceasefire agreement with Israel last week. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. The focus for markets today is going to be on that non-farm payrolls print. The expectation is we will see a higher number than we got last month. Last month, a bit of an anomaly, as we were just speaking about with Mark Cudmore, building on from moderate losses yesterday for the S&P and NASDAQ. But that being said, coming off all-time highs, record highs still for the S&P, 56th record high 2 days ago. Today, futures slipping a bit, down about 1/10%. NASDAQ also not doing a whole lot. The Magnificent 7 did make another record high yesterday as well. So it's record high, record high, record high. Sound like a broken clock. 10-year yields in the U.S. is sort of flatlining here around 4.17, just shy of 4.2%. Again, those jobs numbers will be a big determinant of where we go from here. As we head into the Fed meeting, there's about 18 basis points of rate cuts priced in for this meeting, cumulative 25 between this meeting and the January meeting for the Fed. So the market is thinking if they don't cut at this meeting, they probably will cut come January. And then Brent, obviously very much in focus today, sitting at around $72 here. Yesterday, after the OPEC Plus announcement came out, oil really didn't know what to do. It was a bit of a roller coaster session, but at the end of it, we stabilized at these levels. So even though OPEC have decided to curb their decision or push back their decision to bring extra barrels to the market by another 3 months and then also gradually bring it back over the course of 18 months, that still hasn't been enough to supply a lot of support to this market. So it tells you a lot about the energy fundamentals at this point. Switching over, I also just want to draw your attention to some of the price action that we had in French spreads yesterday. So obviously we've been monitoring the spread, the yield difference between France 10-year yields versus German 10-year yields. We did get to levels not seen since the 2012 sovereign crisis, but our colleague Francine Lacroix had a conversation with opposition leader Marine Le Pen yesterday, and on the back of that, we saw some market movement, namely because Marine Le Pen was reassuring investors that she thinks a budget can actually pass in the next couple of weeks. And I guess that is the language, that is the type of tone that investors do want to hear. So we saw a tightening of French spreads into and out of that interview. All right, moving on. RBI decision is in focus as well. The market was not really expecting the RBI to go for an interest rate cut, but Avril Hong is in our Singapore studio with all the reaction.
Yeah, we're seeing Indian assets flat as we await the readout of the monetary policy statement from the RBI Governor Shaktikanta Das. And we're seeing how the expectations are for it to leave things unchanged. But of course, there have been some in the markets and economists as well who expect this meeting to be a really lively one because of a massive miss to the GDP growth print just last week. And we're also seeing how even if it doesn't cut the benchmark rate this time around, it might tweak liquidity, which is tight in India, and this could come in the form of a cut to the cash requirement ratio. So still waiting to see what we get from the RBI governor. Of course, it's not just about the monetary policy, it's also about the policy makers, because the RBI governor's 6-year term runs out next week, and we haven't really heard anything about clarity regarding whether his term will be extended. For now, we're seeing it flat across the board on Indian assets. Jumana?
Yep, as we await that interest rate decision, and as I was saying, most people are not expecting to go for an interest rate cut, but Bloomberg Intelligence do think that the time is now for them to start the rate cutting cycle. So let's see what happens when the decision comes out. Avril Hong in Singapore. Well, a measure of French bond risk fell on hopes lawmakers will strike a deal on next year's budget sooner than expected. Far-right leader Marine Le Pen told us exclusively that a budget can be passed in a matter of weeks if the next prime minister is willing to narrow the deficit more slowly.
To ask him to resign would mean to disturb our institutions. Once again, it's his decision. Now, if there is a political crisis, an institutional crisis, and if he can no longer dissolve the assembly, if reshuffle served no purpose, then the French constitution only leaves one other option, which is his resignation. But that wouldn't be a drama either. There would be new presidential elections. General de Gaulle, designed our institutions, and they are very solid. They are extremely solid. Everything's done to make sure that the life of the nation can carry on and not create disturbances that can't be dealt with. If he were to resign now, there would be new presidential elections and new legislative elections.
But are you worried about these crises then leading to severe market reactions?
No, because the reality is that what worries the markets is the economic situation in France. What worries the markets is the lack of perspective concerning reducing deficits. It's the absence of savings at the state level, the increase of taxation on companies that worries the markets. And in fact, you've seen the markets have remained extremely stable over the past few days since the announcement of the no-confidence vote, and even after the no-confidence vote. In reality, they had concerns at the moment of the dissolution in June. But for the moment, whether it's the spread between France and Germany, the rates, or the markets, but for the moment, whether it's the spread between France and Germany, the rates, or the markets, for the moment, everything is relatively calm. Because once again, they realise that anyway, there has to be at all cost another policy other than that envisaged by Mr. Barnier.
But the market is probably looking at the fact that the ECB is standing close and that there's a want from France of getting the deficit down pretty quickly.
Well, yes, but once again, there's a long way to go between wishes and reality. Mr. Barnier wanted to reduce the deficits. He's increased them by 12 billion. You see what I mean? So, once again, using a hammer to bash French people over the heads with taxes, when we're the country with the highest rate of taxation in Europe, is not the solution. But it's the only solution that French leaders have implemented for years. It doesn't work. Look at the situation that we find ourselves in. So help companies, enable them to do business, reduce production tax, reduce the cost of energy, or at least reduce it to the same level as the cost of production in France. Those are things that will allow companies to develop and thus create employment.
Voilà, ça, ce sont des lignes qui vont permettre aux entreprises de se développer et donc de créer de l'emploi.
But Madame Le Pen, I mean, first of all, the Barnier actually proposal means that GDP would be the deficit of GDP would be 5% in 2025 compared to 6% this year. So it's going down.
Non, il augmentait de 12 milliards le déficit.
No, the deficit rose by 12 billion. The deficit rose by 12 billion. But the head of Safran, which is a major company, has just given an interview. And what did the head of Safran say? He said Barnier's budget is a bad budget. So, in reality, the fact that it's last year's budget that's applied, however unfair it was socially, is actually rather good news for companies. There are a certain number of entrepreneurs in economic circles who are in fact pleased about the no-confidence motion because they consider Mr. Barnier's budget was worse than last year's budget. And that's saying something.
That was French National Rally leader Marine Le Pen speaking exclusively with Bloomberg's Francine Lacroix in Paris. And during the course of that interview, we did get that RBI decision. As we spoke about, there was an expectation that they would keep rates on hold, and they have. They've kept rates at 6.5% unchanged. But listen to this. There was a very tight split. 6 members voted to keep the rate unchanged, but 4 actually opted for a cut here. So there is a split in the committee, and what we are seeing is a bit of a drop in the rupee. It's down about 0.1%. So this is the reaction in some of those key assets, and you can see that the Nifty is also dropping a little bit on the news as well, as they decided to keep rates unchanged. As far as the growth outlook is concerned, the governor is saying that the growth outlook looks resilient but warrants monitoring. All right, well, U.S. stocks slipped yesterday, their first decline in 5 sessions, with the S&P coming off record highs. But the gulf in valuations with European stocks remains. Our next guest says investors' relative positioning towards the region's equities is even worse than during the European sovereign crisis. Let's bring in Citi Managing Director and Head of EMEA Research, Elise. Badoy, great to have you with us over here. Maybe let's just start with that statement, because it really struck out to me from your report. So investor sentiment towards Europe is even worse or as pronounced as it was, as negative as it was, going all the way back to the sovereign financial crisis?
Thanks, Jumana, for having me on. So essentially, investors' positioning is very strongly not in favor of Europe. Things shifted probably around June time after the Macron decision around snap elections. That sort of, at that point in time, we saw a turn in sentiment. At that time, also, PMI double dipped. We also had essentially a cycle of EPS downgrade further pronounced during the summer. And we saw European equities sort of retracing. At that point, also, obviously, since then, we've had the US election widening the gap, and we are at a place where essentially investors are overweight Europe. It's a consensus. Overweight US. It's a consensus trade, and completely underweight Europe.
Yeah.
So it's extreme.
Can I ask you a question? Is the concern here about growth, or is it about political paralysis, given what's happening in France, given the snap elections that have been called in Germany? I mean, once these political events are out of the way, could we see some upside risk or no?
So, Jumana, I think it's important to mention that it used to be, let's say back in June, being exposed to Europe was a risk, and I think it's shifted now to not being exposed to Europe could be potentially a risk, although we are overweight the US. That's our stance. We believe that the European market provides a nice diversification in the rest of the world. But unpicking the issues of Europe, I think it is a combination, I'm afraid, and this is almost, you will need a catalyst to see it recovering, and that catalyst has to come from an easing of the perception of political uncertainty on the one hand, and on the other hand, some fundamentals, and perhaps also some fundamentals beyond Europe, of course, and China, because the European market is a proxy for China in many ways.
Yeah, but one thing that we were tracking, obviously the whole world has been looking at those French credit spreads very closely versus Germany, but on an absolute yield basis, things are still looking subdued. Yields have been rallying in line with general duration rallying. But one thing that our colleagues pointed out is that there are some corporates that actually trade at a tighter spread than the sovereign. That tells you that, even though investors can be quite negative at a sovereign level, but on specific corporates, they're not as negative.
So I think it's important to distinguish, obviously, the French economy and the French news, and we've heard Marine Le Pen interviewed with Bloomberg earlier on, and the market, both the equity market, the credit market, and corporates. And it's two very different things. And if you look at France, obviously the CAC 40 is certainly not a proxy for the French economy. It is impacted by the French economy, the French, some form of sentiment, let's say, and investors' confidence and consumer confidence as well impacts the French economy. But the CAC 40, 15% of it only is exposed to France. So I think, you can unpick both concepts. In terms of fundamentals, remember, the next reporting is not before February. So we're in a moment where markets are going to look at macro data, political data. But, we're going to get a form. If we get any reassurance on the fundamentals, it's not going to be before end of January, February.
Yeah.
So I think that's important. We're in that sort of uncertain time for fundamentals.
Yeah, and then what is the market penciling in terms of earnings growth? Because, again, that is another feature, a strong feature of the U.S. stock market, particularly tech stocks there. They continue to exhibit strong earnings growth. What's the outlook for Europe? So
the differential of growth is still important between Europe and the U.S. We expect about 5% earnings growth, EPS growth for next year. The U.S. is double-digit, obviously, so it's a very, very, very big gap. But that gap is also related to the sectors that make up the U.S. and that make up Europe. And you've mentioned tech, and obviously that's the feature of the U.S. market. I think the differential of growth, though, doesn't necessarily explain that differential in valuation. And the European equity market trades at around 14 times PE, whereas the U.S. is on 25 times. That's as wide a gap as it gets. And at some point, one might expect that there are certain features that investors are not focused necessarily 100% on. So, for example, the strong dollar is something that could be a tailwind for Europe, definitely. Whether it's luxury goods, whether it's industrials, those are sectors that could see a tailwind.
Yeah. What is your expectation of how tariffs and the imposition of tariffs could affect certain sectors within Europe? Do you get the sense that investors are beginning to position for the imposition of tariffs?
So tariffs have been much talked about. Obviously, there's, I think, the uncertainty around tariffs and whether they'll be implemented or not the timing, whether they're going to be broad-based or, laser-focused on a sector. All of those factors play in. And I think it's that uncertainty that is a little bit unsettling the market and asking the questions. In reality, when we look at it, let's say even a broad-based tariff straight implementation, which would be an extreme case, correct? Even that has only, probably basis points impacts on GDP in Europe. And in terms of sector and markets implications, obviously, it's very difficult to actually pinpoint it and to see a dramatic outcome. There are mitigation factors, and I think any signs that actually tariffs will lead more to a negotiation, and I think there are headlines already coming about that. As soon as we see that sort of almost like overhang will dissipate, and it's very much a sentiment at the moment rather than an actual impact.
Yeah, very fair. Elise, great to chat to you. Thank you so much for coming on our show. Elise Badoy, Managing Director and Head of EMEA Research at Citi here in Dubai. Well, coming up, Citi also says that investors from the Middle East are joining companies from the U.S. to China in search of deals in Africa. We'll have more on which sectors the Gulf has set its sights on next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Citigroup says rich Middle Eastern investors are looking for deals in Africa, particularly in agricultural projects, critical minerals, and renewables. Countries such as Kenya and South Africa are being targeted, but despite opportunities, investors faced a range of challenges. So for more, Bloomberg's Indira Ganga joins us from Kigali. Indira, what more do we know about the potential for deals and deal-making out of the Gulf into Africa?
Jumana, we are seeing an influx of companies from the Gulf coming to the continent looking for opportunities and areas to invest in. Like you said, energy and agriculture are their main priority. If we look at energy, the continent is home to critical minerals such as copper, cobalt, and lithium that are key not only for the EV industry, but also driving green energy solutions. Then when you look at agriculture, the continent is also home to large tracts of arable land that can help solve food security. And Citibank is saying some of these deals are materializing. We're seeing ADNOC and Aramco bidding for Shell South Africa's downstream assets. And Citibank also says that countries like Egypt, Nigeria, and Angola are attractive because of the massive drop in asset value. We're also seeing companies from the Gulf being very aggressive in their bidding. Last year alone, they bidded and pledged $53 billion in comparison to the $100 billion that had been pledged over the last decade, just going to show you how attractive Africa has become to the rest of the world in just under a year.
Yeah. What are the typical challenges ahead for these investors as they look to enter the African market?
There are a couple of risks, Jumana. One, political risk. If you look at a country like Mozambique, rich in natural gas, but there's insurgencies in areas like Cabo Delgado. They just finished an election, and there's political volatility in the country. You look at Mali, very rich in terms of gold reserves, but we had Resolute Mining and Barrick Gold Corp employees being arrested over escalating disputes of mining rights. Then you have Nigeria, where Binance officials have also been detained. But there are also other challenges like economic. The economy is growing slow. Our currencies are weaker, and the African economy is just deemed to be very unstable because of their policy environment. In terms of fiscal, African countries are crushing under the weight of unsustainable debt, and we are seeing that maybe this foreign direct investment could offer an alternative way to financing their development needs.
Bloomberg's Indira Ganga in Kigali. Thank you so much for bringing us that story. Well, coming up, airlines begin their return to Lebanon following last week's ceasefire agreement with Israel. We'll discuss the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkish Airlines has resumed flights to Beirut after Lebanon reached a ceasefire agreement last week with Israel. Foreign carriers had halted flights to Lebanon in September after Israel stepped up strikes on Hezbollah, including its heaviest attacks on Beirut in almost 2 decades. Bloomberg's Lina Rashdan joins us with more. Lin, well, many Lebanese people, including myself, have been monitoring all of the airlines that are flying into and out of Beirut. So just give us a sense for which airlines have decided to resume operations now that there is a ceasefire agreed.
Some of the Mideast carriers have returned. We have Turkish Airlines, Iraqi Airways, and Royal Jordanian. They're flying in. They've been since the start of the week. Qatar Airways and Etihad are supposed to also start from next week and the week after. Some are still missing. Noticeably, Emirates hasn't returned. Their flights are still halted till the end of the year. Air Arabia, Fly Dubai, those carriers are still staying away, as well as the European carriers.
And the airlines that are choosing to stay away, are they doing that because of political concerns, or there are other reasons?
So I think it's a lot of reasons. You have a shortage of aircraft, so a lot of these planes are deployed elsewhere. We're going into the holiday season, so these flights are already booked. The airlines don't want to upset their customers by canceling some flights to send aircraft to Lebanon. Then you also have the geopolitical risks. Some airlines are waiting to see how things develop. It's to be on the safer side.
So it actually became like a bit of almost like a running theme on social media that Middle East airlines continue to operate with during the course of the summer and the bombardment of Beirut, the heavy airstrikes that were taking place. But what do you think the significance is to the broader airline industry to have international operators return to that market?
I think tourism is such a big form of income for Lebanon, especially while it's in a dire economic crisis. So it's really important to get, and especially the Lebanese diaspora being so big, to get them back into the country. Middle East Airlines was the only operator running since September. Actually, Lebanon suspended all licenses for all foreign carriers. They all had to reapply to go back into the country.
Interesting.
And Middle East Airlines was almost full. The prices were really high. I mean, the prices are still really high if you want to book a flight back to Beirut. But the more carriers come in, the more people can come in, the more you can inject some cash into the economy.
Yeah, ultimately that's the hope. But still, as we've been speaking about on the geopolitical side of things, the ceasefire seems to be somewhat tenuous. It's on shaky ground. Aline, thank you so much for bringing us that story. That was Bloomberg's Aline Al-Rashdan talking about some international operators resuming flights back into Lebanon. A quick look at equity futures as we head into non-farm payrolls day in the U.S. Everything is leaning towards the red today. S&P futures down about 7 basis points. Nasdaq not doing a whole much, but Eurostoxx futures down about 0.4%. There, we are seeing a bit of a rebound in some of the French assets after the Bloomberg TV interview with Marine Le Pen. We'll be back in a moment. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. In a major blow to Syria's Bashar al-Assad, rebels have now captured the central city of Hama, increasing the threat to the president's hold on power. And traders on the watch for U.S. jobs data that could sway the Fed on a potential rate cut this month. And OPEC Plus accepts defending oil prices will drag on much longer than expected as the group delays reviving output for a third time. Good morning again. It's just on 9 a.m. across the Emirates. I'm Jumana Versace in Dubai. Welcome to the second hour of Horizon's Middle East and Africa. And in the second half of this show, we'll also be leading with our Africa Amplified show with Jennifer Zabazaja. Now, straight to markets, not doing a whole lot this morning. Futures leaning towards the red. S&P down about 7 basis points. Nasdaq unchanged as we speak about a slightly negative session yesterday, but again, building on record highs, yet another week of record highs for both the S&P and the Magnificent Seven yesterday in the Nasdaq. Attention turns to those jobs data numbers that are coming out later today. There is an anticipation that we're going to see a headline figure north of 200,000 jobs creation, obviously focused as well on those wage growth figures and the impact it could have on rate cut expectations. About 18 basis points priced in for this December meeting. 10-year yields at 4.17, not doing a whole lot, but again, we have sort of stabilized around this 4.2% level. And then oil, $72 for the Brent complex. And despite the OPEC Plus announcement yesterday, their decision to push back the extra supply of oil to the markets by another 3 months, we didn't see a lot of support come in for the oil complex. So here we are sort of trading sideways here around $72 a barrel. Switching over, and one other theme that has been on our radar this morning has been what has been happening to cryptocurrencies in general, but also the price of Bitcoin. Yesterday, we spoke about it briefly, breaking through $100,000. And you can see that over the course of November, Bitcoin alone added more than $500 billion in market cap. That's just 1 month. So $500 billion worth of market cap throughout the course of November, and another $100 billion just in the first couple of days of trading of this month as well, as Bitcoin reached new heights. And this morning, with President Trump announcing that he's nominating David Sachs to be the cryptocurrency and AI czar. So it does tell you that cryptocurrencies will be in the realm of oversight for this new Trump administration, and is giving a bit of life to that part of the market. Okay, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio, piecing together everything that's going on between Korea and also that interest rate decision out of the RBI. In the end, they opted for an unchanged rate move.
Yeah, they didn't change the key repo rate, but it was really interesting how they cut the cash reserve ratio. So a tweak to liquidity. This is something that might excite bond traders. So you're seeing the Sensex in India managing to recoup some of the declines from earlier in the session. Indian assets, of course, have been flat going into the RBI decision. And given how we didn't see a cut to the benchmark rate, it suggests that the onus, the buck kind of passes to the Indian government to kind of support growth in the country. And of course, the RBI governor sounded quite hawkish, given all his comments on how they are still dealing with inflation. Now, that is what we're seeing in India. The rest of the region looking pretty cautious, including in South Korea, as you alluded to, including in Japan, as we look ahead to U.S. jobs data as well. Jumana.
Avril, thank you. Avril Hong in Singapore. Now, Syria's army says it has ceded control of the city of Hama to advancing rebel forces. The rapid progress made by Syrian insurgents increases the threat to President Bashar al-Assad's hold on power. Bloomberg's Honor Ant has been following developments for us. Quite a complicated situation given how many players have been involved or have troops present on the ground in Syria. But let's just talk about the specific significance of Hama falling. What could happen from here?
Well, as you said earlier, Jumana, the fall of Hama increases the risk to Bashar al-Assad's government because of the fact that it basically falls halfway between Aleppo, where the latest round of advance began, and Damascus, where the government is stationed. But it also raises further questions, and they are equally important. That's about the ability and possible willingness for Russia and Iran, two main supporters of Bashar al-Assad, since the civil war began in 2011, to provide further assistance to him. The advance and the pace of that advance and how vulnerable the Syrian army, Bashar al-Assad's forces, has proven to be since the latest round of advance began, raises questions about the possibility that Russia and Iran might step in to provide further assistance to Assad, and that's a huge factor to take into account when assessing the future of al-Assad and his government in Syria.
Yeah, well, during the Syrian civil war, we know that Hezbollah fighters came to the aid of Assad. And I thought it was interesting yesterday to hear from the new Secretary General, Naim Qassem. He mentioned in his speech that they would be supportive of Assad, but unclear how exactly that's going to happen, given Hezbollah themselves are so weakened by the developments over the last couple of months. So that raises the question of who exactly is going to come to Assad's aid. We know that Iran's proxies around the region are on the back foot. Iran itself is on the back foot, engaged in this hot, cold war with Israel. And Russia, who also came to the help of Assad during the civil war, are embroiled in Ukraine. So who is Assad going to rely on?
That's a great point. Both those two supporters, Russia and Iran, are in no way as strong as they were about a decade ago, which is exactly when they put the tide of the war in favor of Assad between 2014 and 16. So now, if Assad has to rely on those two, the problems are as follows. For Iran, it's becoming increasingly difficult to send militia, the proxies that it supports from Iraq into Syria. We've seen resistance from the likes of al-Assad, in fact, just yesterday. So that route, even if it's not closed, it's not as functional as it used to be. On the other hand, Russia never had a huge amount of ground forces in Syria, but relied primarily on air support for Syria's own forces, al-Assad's own forces. But the problem is, those forces have been collapsing at an unexpected pace, both in Aleppo and then later around Hama. So it's unclear, A, how much support that Iran support can possibly provide, and B, even if they do come close to the kind of support they provided about a decade ago, it is just unclear how effective that support might have been because of the fact that Syria's own army, Bashar al-Assad's own forces, have proven to be basically collapsing in the face of the rebel advance.
Yeah. Let me just ask you also about whether this insurgent success is giving rise to other insurgency moves within Syria. And also here specifically, I'm talking about some of the Turkish-backed groups in the northern part of the country. What are we seeing there? And again, Onur, how likely is it that Turkey get involved in the situation this time around?
I think quite a few different players are taking advantage of the current shifts underway in Syria. As you said, even when we talk about the rebels' advance, HTS, yes, is a leading force, but they're not really the only force. Now, because of the fluidity in terms of how the rebels and opposition in Syria has worked over the last 13, 14 years, it's difficult to designate each group and sort of attribute them to a certain camp. But yes, certainly Turkey-backed groups, especially in the northwest, have been a lot more active than they were over the last basically 4 years. We have seen Turkish forces take over Tel Rifat, and probably Manbij is the next in line, where there were pockets of US-backed Kurdish forces. Turkey likes to call them YPG, the US likes to call them PYD or SDF. And we have seen also the Kurdish forces trying to move further south and east, possibly towards the east of Euphrates again, where they have senior forces there to take care of areas or to increase their dominance in areas around Beirut. So yes, a lot of forces, including Turkey, are taking advantage of the shifts underway in Syria to lock in gains.
Yeah, and with over 3 million Syrian refugees gone into Turkey since the civil war, it is going to be high on the agenda. Bloomberg's Onur Ant in Istanbul. Thank you very much. Now, let's get the latest on the oil market. OPEC Plus is coming to terms with signs that its mission to defend crude prices will drag on much longer than expected. At an online gathering, the group agreed for a third time to delay the revival of halted production and to slow it down. Bloomberg's Paul Wallace has all the details. So, Paul, just run us through what the highlights were from that meeting and also what would have prompted OPEC Plus to take that decision.
Hi, Jumana. I think ultimately it went pretty smoothly because they didn't have much of a choice but to delay once again their production increases. OPEC Plus is really stuck in a bind at the moment. It began these production cuts sort of around the middle of 2023, and it's certainly, at that time, it certainly didn't expect that it would have to wait until now and counting before it could revive that production. The main problem for them is tepid demand growth in China, or very much stuttering demand growth in China. Added to that, there's pretty healthy supply growth from outside of the OPEC Plus cartel. So you add those two things together and you get a market that is likely to be oversupplied, even if OPEC Plus doesn't add any more barrels to the market next year. So that's a real conundrum. And for now, the group really has no choice but to sit back and wait for either demand to improve or supply outside the group to fall.
Paul, how much of this decision do you think was OPEC Plus just deciding to buy a little bit more time before the Trump administration comes back to office in January? And of course, we know that not just energy independence, but energy dominance is going to be a theme for the Trump administration this time around.
Absolutely. It's a bit difficult to tell. I mean, there is an argument to say that Trump certainly wouldn't like anything like OPEC Plus decreasing production further and causing a spike in prices or anything like that. But I think, to be honest, the reality is just the market conditions right now. Oil prices are down around 15% since June. Brent is barely over $70 a barrel. A lot of analysts, including JP Morgan, think it will go into the 60s next year, even if OPEC Plus continues restraining production. The US, in terms of making it an energy superpower, it's already there. You know, crude production alone in the US is over 13 million barrels a day, way more than Saudi Arabia, which is pumping about 9 million barrels a day now. If you include NGLs, natural gas liquids, the US is over 20 million barrels a day, and that's the figure that is pretty much their total oil production. So, you know, the US is already there. How much more it can keep pumping is an open question. Trump might try and ensure it does keep going higher, but yeah, the US is a bit of a problem for the OPEC Plus at the moment.
Yeah, well, that's one way to phrase it. Also, just to remind viewers that the Permian Basin alone, if it were a country, would be the second largest producer of oil in the world. So it is a significant producer and a major factor contributing to what we're seeing on the supply side. Bloomberg's Paul Wallace, thank you very much. Well, coming up, investors are awaiting U.S. jobs data today that could shape this month's Fed decision. We discuss the outlook for investors. More on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Traders on the watch for U.S. jobs data that could sway the Fed on a potential rate cut this month. The estimate is for a gain in U.S. non-farm payrolls of 220,000, up from a meager 12,000 increase in October, albeit then it was impacted by certain one-off situations. Now, joining us is Alan Higgins, Chief Investment Officer at Ahli United Bank. Great to have you with us on the show in person. Good morning. Let's talk about the upcoming non-farm payroll print. Do you think it's going to be that much of a swing factor in terms of determining what the Fed do next week?
It is always a big deal. It's the indicator alongside CPI, as we know, albeit, as you said, it's a slightly messy couple of months because of obvious reasons. But for me, I'll be looking at, and a little bit of emphasis has gone away from this, I'll be looking at average hourly earnings because the Fed still has a little bit of work to do on inflation. And if you brought up a graph of that in the terminal, you can see it's above averages, above long-term averages, average hourly earnings. So definitely, you know, if there's going to be a negative surprise, a tick up for that, I think it's expected to fall slightly.
It's funny you say that because we have spent pretty much every show trying to analyze what the imposition of tariffs could mean for U.S. growth, global growth, inflation. And I wonder whether, given the delay in implementation of tariffs, and that's going to take time, especially if it's a phased and negotiations among the countries, whether actually we should be focusing on what Trump administration does with immigration. Because if they introduce immigration curbs on day one, you could almost instantaneously see a wage shock impact.
Yeah, that's fair. That's fair. Again, in the numbers, initially it will be anecdotal if that happens, but in the numbers over a couple of months that will feed through. But look, I mean, the good news is we've had a significant fall in inflation, and you know the financial markets are obviously loving that. But there's work to be done still because you know the so-called last mile or final mile to get rid of this inflation, not just in the US. Eurozone's pretty much done, but the UK's in that boat as well. So yeah, I mean. It could be very interesting because what Trump does, could it be inflationary? And that could that stop the Fed from easing?
What do you think would stop this march higher for stock markets? Every day we seem to be talking about a new record high. Investor sentiment also very high going into next year. Positioning seems to be stretched, but we keep going.
No, exactly right. So looking for the catalyst is hard, but I think you're right to indicate caution. Look, I work for a private bank, right? So stocks for the long run, absolutely, But look, right now, actually, I was watching a couple of days ago, and you pulled up a graph, and it made me look a bit closer. Sentiment. I think this was from the conference board. Consumer sentiment towards stocks off the charts.
Yeah.
And it's a contrarian indicator.
Yeah.
And it's not the only one. There's other simple ones. Vol, VIX. VIX is at very, very low levels. Things like the Merrill Lynch survey, allocations to US stocks. And it's not just about US stocks, by the way, Jumana. If you look at credit spreads, really, really tight. So look, we're long overdue a correction. And I was actually thinking about this, but what is the catalyst? It could be today. It could be a surprise today. But sometimes when you look back, I was thinking back to, because I was looking at that chart that you displayed a couple of days ago.
Yeah.
And I look back at December 18. You might remember the big correction December 18. It was also elevated then. Less elevated than today, some of that indicator and some other indicators, but it was also elevated then. And looking back, was there a real catalyst in December 18? Hard to find, but stocks fell 20%.
Yeah.
Very, very quickly. And just, working in private banking, that's our nature to look at sometimes the worst case. A 10% correction every calendar year is completely normal.
Yeah.
We haven't had one.
Well, we saw a bit of a hiccup in the summer. We saw
8%,
but the Nikkei, that was the unwind of the carry trade. So I do wonder if we do get some form of a VAR shock similar to that at some point.
Fair.
But it's difficult to hedge for it. So I actually do want to ask you about gold, because for so much of this year, gold was seen as the hedge, the geopolitical hedge, the hedge against the widening deficit situation in the U.S., but it's been struggling as of late. Do you have a view on where we could go from here for gold, or what do you recommend to your clients?
Yeah, so gold, we like allocations to gold, absolutely strategically, and you're right, but it's been a puzzle all year because the quants out there will say, going back in time, gold is correlated with real rates, and so gold should have sold off in this higher era for rates, and it hasn't. It was strong. And then recently it's come off the boil. So as we know, it's not about customers like us, ETF buying. ETF buying hasn't been there until recently. It's all about central banks. And for whatever reason, they seem to have paused building up, and that's really hard to look at. But actually, look, having an allocation to gold, it's in our strategic portfolios, absolutely, and we'll stay with it. And any material weakness, probably add to it.
Yeah. Let me just ask you a final question. Coming from your European background, obviously a lot of concern about what's been happening in France. And yesterday, our colleague Francine Lacroix sat down with Marine Le Pen, and it actually was a market-moving interview because Marine Le Pen sort of suggested that she thinks a budget will pass, and she's not one of these massive proponents of super wide deficits. She just wants to reduce the size of the deficit slowly, which is, I guess, music to the market's ears. Do you think the market's perception of French risk is perhaps inflated versus what it actually is?
Yeah, it was. It was quite an interview for Francine. Look, I think a couple of things going on here. I think, a lot is priced in now into France, but the issue is deficits, right? That's the underlying issue. They're very hard to get rid of without strong growth or hard measures. And the people don't like hard measures. And by the way, we've got this to come in the States. Okay, the US is special, but not that special. I think there will be deficit issues in the US. But coming to France, a lot priced in. It's nothing like 2011.
Yeah.
Lived through that. 2-year Italy traded at 7.
Yeah, I was there.
You remember that?
Yeah.
So, look, it's nothing like that. A lot priced in, and maybe they're learning from the Italian government.
Yeah, well, exactly. So Meloni actually did do the right thing on the deficit front. Great to chat to you, and it was good to get your views. Looking into 2025, maybe deficits is the headwind that markets should be worried about. Alan Higgins, CIO at Ahli United Bank. Now, coming up, the leader of South Korea's ruling party now says President Yoon should be suspended from office. At the end of a dramatic week, we'll bring you the latest developments live from Seoul. That's next, and this is Bloomberg. The leader of South Korea's ruling party now says President Yoon should be suspended from office quickly, an abrupt shift that makes it more likely an impeachment motion will pass. Let's get the latest from our Seoul bureau editor, Danny Thomas. What can we expect in the coming days, Danny?
Well, it's been a day of more dramatic developments. The leader of the ruling party today shifted his position, and he wants Yoon to be kind of cut off of all his responsibility as early as soon as possible. That would indicate that the impeachment motion that is likely to take place tomorrow could see could go through and have the required votes. But right now, the news is that Yoon and the head of the ruling party, they are in a meeting, and the outcome of that meeting will give us a sense of how this drama will unfold. That's where we are. We don't know when the meeting ends, but once that people come out of the meeting, we would know when and how the next leg of the impeachment motion moves.
Yeah, well, as you're speaking, we're keeping a close eye on some of these Korean assets. The uncertainty definitely still weighing on the Korean indices here. Our Seoul bureau editor, Danny Thomas, with the updates from Korea. Well, coming up, Africa Amplified, our monthly deep dive into the continent. We're going to be looking into Joe Biden's first and last visit to sub-Saharan Africa as president and his pledge to help fund a key infrastructure project. Jennifer Zabazaja will have all the details for you. This is Bloomberg.
Hello and welcome to Africa Amplified, Bloomberg's monthly show, bringing the continent's biggest stories to the world. I'm Jennifer Zabasaja in Johannesburg. This month, we get presidential as Joe Biden makes his first and only trip to Africa as president, just weeks before leaving office, in a visit some see as a counter to China's growing influence on the continent. We'll discuss what his trip means for the future of U.S.-Africa relations as Donald Trump prepares to return to the White House. And sticking with that theme, South Africa takes over the presidency of the G20, but will its multilateral aims clash with Trump's America First policy? Plus, Ghana goes to the polls to elect a new president against a backdrop of economic hardship. We'll take a look at the biggest challenges facing the next administration. All that and more coming up in the next half hour. But first, an update on some of the top stories we're following from across the continent, as we always do. We'll have the latest from Kigali in the east and Cape Town in the south. But let's start with news out of Nigeria in West Africa. Nigerian President Bola Tinubu returned from a 3-day trip to France where he met with Emmanuel Macron just before the French president's government fell to a no-confidence vote. Now, Tinubu aimed to attract foreign investment back to his country as he touted the impact of his reform programs.
We've been working on stabilizing the security system in Nigeria, and we are getting closer and closer. We are doing better now in the area of security. I can assure all the investors here that Nigeria is open for business.
And for more, let's get to Bloomberg's Ruth Oluronbi, who is in Nigeria's capital, Abuja. So, Ruth, thanks so much for joining us. You are following Tinubu all the time. Talk to us about how this visit to France ties in with his broader strategy, really for the country and also for attracting more foreign direct investment back to Nigeria.
Thanks for having me, Jennifer. I think that the deals that Nigeria announced that is signed in France are indicators to the president's ambition towards attracting investments in Nigeria. For instance, we saw Total's Energy committing $750 million towards developing its gas field. And oil and gas has been one key area where the president sees investments coming in. We also see Nigerian government announcing that it signed an agreement with the French government towards developing the mineral sector, which again is another key area where the president sees investments coming in. And he has been developing some and also implementing some reforms in that area and giving incentives such as tax breaks for the mineral sector and also improving security in those areas. So I think those are key areas where the president sees investments coming in, and we saw that in France.
Yeah, and we've obviously seen the president really try to hone in and at least show some support for the reforms that he's been doing. Let's just turn, though, to what we've seen from the central bank, Ruth, because we've heard a bit of, I guess, a little bit of hesitation from Cardoso in terms of rate cuts, but potentially now signaling inflation may be cooling and we could see it coming on the way. Can you just talk about what he's saying now?
I mean, it's the governor of Central Bank, Olayemi Cardoso, did say that he sees inflation cooling in the future. But you have to also put in mind that Nigeria's inflation is still at almost 34%, and 2 out of 3 Nigerians are still hungry. But if you look at the key drivers of inflation in Nigeria, such as the price of gasoline, the pressure on the naira, those seem to be easing and stabilizing. But I think that by January, we should be able to know exactly what the health of the economy looks like.
Yeah, where an economy where we've seen inflation skyrocket a bit. Bloomberg's Ruth Olaronbi out of Abuja, Nigeria. Ruth, thanks so much for joining us. Now to South Africa, Southern Africa. Namibia has elected its first female president after the ruling party held onto power in a disputed election. It was the worst ever electoral showing for SWAPO, which has governed since independence in 1990. Let's bring in Bloomberg's Matthew Hill. So, Matt, why were these elections so controversial? And what should we expect then from Namibia's new leader?
Hi, Jen. Thanks very much. Yeah, as you point out, Netumbo Nandi-Ndaitwah will become Namibia's first female president, and she takes over at a time when the Southwest African nation is preparing to cash in on an oil and gas boom. Companies like Total Energies and Shell discovered massive hydrocarbon natural resources off the country's west coast. And Nandi-Ndaitwah has already spoken about the need to find a balance between ensuring that the local population benefits enough from the natural resources. Namibia also is extremely rich in minerals like uranium and diamonds, while at the same time ensuring that investors make the profits that they are there for. Namibia is one of the world's most unequal countries, and it's also got very high poverty rates and unemployment rates too. So finding that balance will be critical. The elections were controversial because though there were less than 1.5 million registered voters, turnout was high. More than 3/4 of those did arrive to cast their votes, and queues were very long. By 5 a.m. the following morning, many people were yet to cast their votes, and there was shortage of ballot papers, problems with the biometric machines. And because of these issues and others, the opposition parties have indicated that they intend to challenge the election results in court.
And that's a similar theme that we've seen a bit throughout the continent and these elections that we've seen this year. Bloomberg's Matthew Hill in Cape Town. Matthew, thanks so much. Let's go to East Africa now. Tanzania will honor its 30-year concession agreement with the Adani Group to operate a container terminal in Dar es Salaam. That's despite the U.S. bribery probe of Indian billionaire Gautam Adani. But hours after the indictment, neighboring Kenya canceled $2.6 billion worth of airport and power transmission contracts that tycoon conglomerates had pitched for. Let's bring in Bloomberg's Ndiro Oganga, who has been following this story from us in Kigali. So, Ndiro, Tanzania and Kenya have taken different approaches to dealing with the Adani Group. What's behind this?
Hi, Jen. So Tanzania says there was no breach of contract in the agreement with Adani and everything was done within the confines of the law. And they say that the rights of investors are also protected by the constitution, so they just can't wake up and drop the deal. And Tanzania and Adani signed a deal that will see Adani ports operate 2 of the largest terminals in the port of Dar es Salaam for a period of 30 years. Another reason why they're very keen to move forward with this deal is their president, Samia Suluhu Hassan, wants to turn it into a regional hub. And she is fast-tracking mega infrastructural projects in the country so they can be able to compete with the port in Durban and also the port in Mombasa. On the contrary, the Adani deal was unpopular in Kenya. They wanted to build and operate the Jomo Kenyatta International Airport for a period of 30 years for only $1.9 billion. And people went to court saying that this deal will bring unforeseen financial burden to Kenyans. And also, the economic benefits are very little. So due to this pushback, those charges were a perfect alibi for the government to drop this deal.
Bloomberg's Indira Oganga have been following this story for us. Indira, great to have you on so much. Thank you so much. Now, coming up, President Biden, as we mentioned, makes a landmark visit to Angola and doubles down on his commitment to help support the Lobito Corridor project. The CEO of the Africa Finance Corporation, the institution supporting the financial negotiations of the project, spoke to Bloomberg from Luanda on the margins of the trip. We'll leave you his comments on the global cooperation in funding the project.
We're going to make a significant financial contribution to the development of the project. Our partners, the AFDB, are also making significant contribution for the viability. I also know going to make their announcement. They'll make the announcement themselves. The government of Italy has recently joined, and they've also pledged, I think about 300 million, for the development of the project. So all in all, I think we're in a good place. I think that we have what it takes to deliver on this project. And I know that there's a lot of anxiety, about U.S. government involvement. Right. And I think that we have bipartisan support. I keep saying it.
A few months ago, the DRC sent the first copper shipment on this railway for transit onward to the United States. The trip used to take 45 days to get to the United States from that. But now it takes less than 45 hours. 45 hours because of the changes you've made. It's a game changer.
This facility will now be able not just to take in raw materials from its outgrowers in a scheme, small-scale farmers, having input supply to them, having an off-take assured market, a fair price, improves their lives. This is great, but also be able to export beyond Angola and beyond Africa. This is what Africa needs today.
Zambian leader Hakainde Hichilema and U.S. President Joe Biden there, alongside some other presidents, as the United States pledges more money for the multi-country Lobito Rail project during Biden's trip to Angola. Now, joining us now to talk more about this is Zianda Stearman. She is a senior analyst for Africa at the Eurasia Group, joining us from Cape Town. So, Zianda, thanks so much for being here. You did have an opinion column that you wrote in a local paper talking about a preview to this Biden trip, but you said that Biden will want his upcoming visit to be a sign of the times. Is that what was achieved, in your opinion?
I think so. By all accounts, the trip itself was a success. In terms of highlighting both the potential, but also really the current benefits of the Lobito project. This is a huge infrastructural undertaking, and that's deeply supported by the US, the EU, and others who are looking for, I think, real market access to critical minerals in Southern Africa.
You talk about market access. Is that the main benefit, you think, from a project like this? Or what is the benefit that a lot of these G7 partners are getting from this partnership?
I think it's, on the one side, very practically market access, both into Southern Africa, but also for those critical minerals from the region out to the US and the EU. And I think also really importantly, it's the deepening of economic and diplomatic ties, between, again, Zambia, the Democratic Republic of Congo and Angola. And those are all really deeply held goals for the governments of those countries who are looking to invest or looking for investments from, I think, a wide source, and trying to, I think, really widen their investment base past a country like China, for example.
But Zianda, I mean, much of the follow-through with this project is going to fall on incoming President-elect Trump. What's your expectation there? Do you think that the administration will prioritize it in the same way that we've seen with this current administration?
So the interesting thing there is that I think, it's better, honestly, for the project to not necessarily be on Donald Trump's radar or front page. We have seen in the first Trump administration that Africa wasn't particularly important, but in the background, there were some really interesting initiatives, especially around infrastructure financing and trade and investment on the continent through, programs such as Prosper Africa, as well as the creation of the International Development Finance Corporation. So this doesn't have to be a priority for Trump himself, but it's certainly, I think, if this project stays in the background but can show real benefit for the U.S., again, in their rivalry with China in particular, then it benefits everybody. It's a win-win-win, but it doesn't necessarily need to be, as I said, top of the agenda for Trump himself.
And yet, Zianda, we're still seeing China outpace the U.S. and others on foreign direct investment to Africa. Do you expect that will continue and Africa then will just be the beneficiary of a lot more investment because this Lobito project seems to be at least an early success?
That's a really good question, and I think only time will tell. The domestic politics across all three of these countries, and we haven't necessarily even mentioned Tanzania, which is a possible expansion point as well. The domestic politics in all of those countries are going to have to be favourable, to, again, the expansion and the growing of an opportunity like the Lobito corridor. So I think all of the ingredients are there for many of the countries, both in the region, on the continent, to really benefit from what is at this point a really, really interesting geopolitical rivalry, and one that Africa can absolutely capitalize on. But it doesn't matter what the individual governments, involved in a project like Lobito and other future investments, how they're going to be shaped, how they're going to, position themselves to really take advantage.
And Zianda, let's just finish on the G20. South Africa took over the presidency. How do you think potentially they can carry the mantle? We've heard Ramaphosa say this is about Africa and prioritizing Africa for the globe. What's your take?
I think that's very broadly true. That's been a hallmark of Ramaphosa's administration, where foreign policy didn't really quite take shape until I think the second half of his first term in office. But now it is really quite laser focused on common issues, that affect African countries, that really run the gamut from, climate change adaptation and equitable access to global financing, as well as equitable access to pharmaceuticals and life-saving vaccines. I think that'll be very much a focus for South Africa's G20 presidency. And I would expect, in the same way that Ramaphosa and his administration invited many African leaders to the BRICS summit in Johannesburg in August 2023, I would expect the same, going into this year's G20, especially given that the African Union is now also a member of the G20.
Absolutely. And they did say they believe Trump will attend, so time will tell. But great to get you on and get your insights. Zianda Stearman, Senior Analyst for Africa at the Eurasia Group, there with us in Cape Town. Thanks so much. Now, coming up, Ghana heads to the polls to elect a new president in the backdrop of economic hardship and a debt crisis. We'll explore the challenges facing the country's next leader. Stick with us. This is Bloomberg. Well, it's been a year of profound political change in Africa and really the globe, with voters punishing ruling parties in South Africa, Botswana, Senegal, and Mauritius. And now Ghanaians are set to follow suit when they go to the polls on Saturday. With the president stepping down, the ruling party is fielding Mahamudu Bawumia as its candidate, but opinion polls suggest a decisive win for ex-president and opposition leader John Mahama. Here's a look at the economic backdrop to the election and the challenges facing the next administration.
Investor confidence in Ghana was high and foreign direct investment was climbing, while multinationals from Microsoft to Unilever to Societe Generale had operations in the country. Things started going wrong, though, as a growing debt burden spurred a surge in inflation to a 21-year high amid a slide in the currency, the Citi. The country defaulted, and after tough negotiations, a restructuring with the IMF followed. Some of these blue chips pulled out, and the crisis spilled onto the streets as the soaring cost of living strangled the economy. But today, there are some positive macro signs to greet the winner of this year's presidential election. Ghana's economy grew 6.9% in the second quarter, the fastest pace in 5 years. And Moody's raised its credit rating outlook for the nation's debt in October. The country's political leaders, though, will need to build on this momentum as they look to repair investor confidence, with opportunities to revive the petroleum industry and further boost its leading position as Africa's biggest gold miner. All this as Ghana services its newly restructured debt and looks to restore foreign direct investment, returning what was once the continent's rising star to the path of economic stability.
Now, for more on Ghana's elections and the main challenges facing the country, let's bring in Bloomberg's senior reporter, Yinka Ibukan, in Accra, Ghana. Yinka, talk to us about what investors are expecting from this election.
So, first and foremost, Jen, investors are expecting peaceful elections, and Ghana has a good track record in that regard. But then in terms of the foreign direct investors, like the ones that you've mentioned, they'll be looking for an improved business environment and also signs that households' purchasing power is being restored after being battered by inflation. For bond investors, many of them have been affected by this restructuring, through which Ghana restructured most of its $30 billion external debt. And so for them, it will be about Ghana showing that it's ready to be fiscally responsible, spending less and earning more, so that they can get restored confidence in this market.
And Yinka, one of the main challenges that Ghana has is with illegal gold mining. You actually have a story out right now just about that. What are we hearing from the candidates about their solutions to fix that?
So illegal gold mining is a multifaceted issue, and we're in a context where Ghana really can't afford to forego revenue that could help prop up its economy. For that reason alone, it's quite urgent that something is done about it. But it's also a social issue because people are literally risking their lives to go get gold, and also an environmental issue with widespread pollution. What used to be the case is that both parties had done crackdowns to clamp down on illegal miners. But increasingly, their discourse is about formalizing the sector and figuring how to capture the revenue while also promoting responsible mining practices. It remains to be seen if there will be political will to follow through on these pledges.
So, Yinka, do you think something is going to change in regards to this issue anytime soon? Maybe just in 30 seconds or so.
It has to change, Jen. It's been like this for a long time, but it does have to change. I think everyone understands that. But it's quite a complex issue, which is probably why it's lasted this long. And it's really about political will.
All right, we'll leave it there, and everyone should definitely check out Yinka's story that is now available on the Bloomberg Now. Bloomberg's senior reporter, Yinka Ibukun, in Accra, Ghana. Yinka, thanks so much for your reporting and for joining us. And before we go, author and columnist Shiku Kamira joins our podcast Next Africa this week to discuss the continent's ongoing issue of brain drain. It's available now and every Friday on Apple, Spotify, and wherever you usually get your podcasts. Well, that's all we have time for today. Join us again next month and next year. From me, Jennifer Zabasaja, it's goodbye from Johannesburg. Thank you so much for joining us.